What's up everyone, and welcome to Jayconomics. My name is Jay and it's a pleasure to meet all of you. On this channel, we take a look at anything related to finance with a strong focus on investing. So if that sounds like something you want to be a part of, then please consider subscribing and liking this video to help me on my quest to befriend the big, bad YouTube algorithm. Today's topic, Bellus Health, ticker symbol BLU. It trades on the NASDAQ in US dollars and on the TSX in Canadian dollars. Let me start off by explaining why I'm feeling so blue right now. And no, it has nothing to do with it being rainy outside. Alright, no more dad jokes, let's dive right into it. So, what's up with Bellus Health? Who are they? What do they do? And why am I even making a video about this relatively unknown company? Also, what is the 3-day rule and how can it potentially make you a lot of money? I'll answer all of these questions and more, so stay locked in until the end. If you've been paying attention to big movers in the stock market in the last couple of days, you may have noticed one company in particular that got absolutely pummeled, losing 72% of their value on Monday. Yeah, you guessed it, it was Bellus Health. But why? Let's get into what this company actually does and what their goal is first. Bellus Health is a biopharmaceutical development company that engages in the research and development of novel therapeutics for the treatment of chronic cough and other hypersensitisation disorders. The company was founded in 1993 and is headquartered in Montreal, Canada. Its product, BLU 5937, is being developed for the treatment of chronic cough and chronic itch. Alright, now that we know what the company's mission is, we can better understand what happened. As I just mentioned, BLU 5937 is currently being developed, and the company announced earlier this week that unfortunately, the trials did not go according to plan. Although there were no negative side effects, the drug hardly had the impact the company was hoping for. However, there are always two ways to look at something: glass half empty or glass half full. In the stock market, we refer to this as the bearish case versus the bullish case. Let's start with the bad. Their main product disappointed, investor morale is low, the company is cash flow negative, and the stock is set up for a lot of volatility, which is definitely not for everyone. So the bearish case is that their next trial also fails, and the company has to reinvent itself and its main product. Investor morale stays low, and people lose faith in BLU. Now the good. According to LifeSci Capital's senior analyst Sam Slutsky, the asset was associated with a low incidence of taste side effects at all doses, solidifying its favorable tolerability profile versus the P2X3 inhibitors from Merck and Bayer. Slutsky maintains his view that BLU 5937 has a profile that can be successfully advanced. What's more, Slutsky cited cough expert Professor Maurice, who commented that the high dropout rate as a result of the pandemic may have played a role in the primary endpoint of not reaching statistical significance. This point is huge and cannot be understated. If there was no pandemic, then the results could very well have been a lot more positive. We'll never know for sure, but keep in mind that biotech companies see a lot of movement in share price strictly based off news and clinical trial results and/or speculation, and this can go either way. This stock is not without risk, but the risk-reward profile on this one is heavily skewed to one side in my opinion. The company has been around since 1993, and their current ratio is over 15. Just to put that in perspective, a current ratio over 1 is considered healthy, so there is no bankruptcy risk anytime soon for BLU. They are also extremely undervalued at these levels with a price-to-book ratio of 1.59. Very undervalued, may I repeat. On top of that, there's been a lot of insider buying in the last 3 months, including the CEO of the company buying up 106,000 shares right after the crash. Furthermore, analysts see a low of $10+ for this stock in the next 12 months with a high of $28. This is what the company's CEO had to say, and I quote, "While we had hoped to see more response in the lower cough patients, BLU 5937 and other P2X3 antagonists may have the most benefit in patients with a greater disease burden. We believe that the Phase 2 data support moving BLU 5937 forward into an adaptive Phase 2b trial enriched for higher cough count patients. We expect to begin this trial in the fourth quarter of 2020. Let's unpack that one second. The CEO believes that BLU 5937 will have a greater impact on those more severely impaired. And with the added knowledge that the company is expected to begin the next phase in Q4, we could see a massive turnaround quite soon. So the bullish case is that the next round of trials have a better result than the first trials. That's the bar right now, and it's quite low. And as long as we receive a little bit of positive news regarding their progress, the stock will be sensitive to this in a very positive way. And finally, the ugly. And short and sweet, this is how investors who sold at a massive loss will feel when they see this imminent bounce back. My takeaway is that the company right now is oversold as panic has set in to many investors. And what was it Warren Buffett infamously said? Oh, right. Be fearful when others are greedy, and be greedy when others are fearful. Now it's up for you to decide whether you want to be greedy or whether you want to be fearful. What's my strategy for BLU? Well, just for full disclosure, this is not a long-term play for me. I plan on staying on until I double or triple my money and then take my profits somewhere else. Keep in mind that this crashed hard with a minor setback in trials. Imagine what it can do with the first bit of positive news coming off a beatdown like this. Now let's talk about the 3-day rule. And that rule is the exact reason why I did not invest in BLU right away. I waited 3 days to do it. But why? The 3-day rule is a rule that many investors are not even aware of. And I promise you that this 3-day rule is not out of style like that other 3-day rule men allegedly have to follow when dating a new woman. Okay, back on topic. Stock market investors always have the urge to buy a stock that gets knocked down sharply. The on-sale emotion grabs us hard and makes us gravitate towards that stock. For example, if a stock falls 20% on bad earnings, many investors rush in to buy that stock thinking it will snap back right away. They think a 20% discount makes it an obvious buying opportunity. In reality, there are specific reasons why the 3-day rule tells you to wait a full 3 days to buy that stock. First, margin calls will likely trigger in some investment accounts. This will create further selling on day 2 and day 3, following the initial day 1 fall. In addition, hedge funds holding the stock that are selling because of the change in outlook or negative news cannot unload their large positions fully in 1 day. In general, Wall Street takes a full 3 days for the sellers of a stock to exit completely and for the calm after the storm to begin. The 3-day rule tells investors and stock traders to wait a full 3 days before buying a stock that has been slammed due to negative news. By applying this rule, investors will generally find their profits increase and losses decrease. Using this rule on our good friend BLU, we see that day 2 and day 3 stayed red and dropped significantly more. Just another thing to keep in mind next time you see a company's stock collapse. Remember that I am not a financial advisor and this video is not meant to be financial advice, but simply sharing my thoughts on the matter. Never invest blindly and always do your own due diligence into whatever company you are investing in. You should understand that company fully, how they make money, and where they are headed from here. In terms of Bellus Health, please do not just take my word for it. Alright everyone, that wraps it up for today's episode. Thank you all for watching until the end. Don't forget to subscribe if this video brought any value to you. And let's grow this community together. Until next time, take care and invest smart.